Good morning or good day, wherever you are. Welcome to our global webinar, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side that will be answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today is Tuesday, 25th of September, 2018. Welcome to Admiral Markets. We will start like every day with our risk disclaimer. Forex and CFD are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find the long version, of course, on our webpage. And also other information like our KIDS key information documents, everything to find on our web pages like admiralmarkets.com. Also information about the retail clients and professional clients offer if you're in the European Union. In the EU, since August 2018, there's a new ESMA regulation in force. So different offers, different leverage options, many more things available in the European Union. A picture shows more than 1,000 words. If you're a retail client, maximum leverage for DAX 30 for index CFDs will be 20, and for Forex majors like euro dollar, it will be 30. So you see the margin requirements differences, 24 euro to 600 euro for the DAX 30, or for euro dollar, 200 euro to 3,333. Only professional clients, if they are eligible and apply for that, can still get a higher leverage up to 500. Of course, there are some benefits also for retail clients. They get an unlimited protection against negative balances. If you're professional clients, check out your broker offer. At Admiral Markets, you will get a additional protection even as a professional client. We call it negative balance protection policy up to 50,000 British pounds, what is round about 70,000 euro. All details about that find on web pages, on our web pages, like here's a specific link, admiralmarkets.com. This is me. My name is Jens. My English made in Germany, so I'm the German guy from Admiral Markets, but this is our global webinar. So I'm the German guy. We have 18 country offices all around the world, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's Day. Like today, on Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marco's Day. On Friday, it's DAX Day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30 or euro dollar, typical actual spread of just 0.8 points or pips without additional commission. Also here, all details on admiralmarkets.com. If you'd like to contact us, you can call us, you can send us email, or visit the other channels like YouTube or Facebook. Everything, of course, linked and to find on admiralmarkets.com. And now enough from my side. Now it's time for Paul. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, everybody. It's lovely to be here. Okay, thankfully, hopefully you can all hear my voice. Hopefully you can all see my screen. Here we are. It's Tuesday, 25th of September. It's a glorious day here where I am in the UK on my travels. But I hope it's a glorious day for yourselves wherever you may be. So we've got a bit of an interesting week, some sort of interesting, let's say, fallout from some of the meetings we saw last week, and also, of course, you know, with the big one really this week being the FOMC reserve meeting tomorrow evening. That's the thing that's going to be kind of keeping traders glued to their screens, sort of waiting to see what comes out of that. I think it's fair to say that the market's pretty much priced in a move. What everybody's interested in is the actual conference by Federal Reserve Chairman Powell, and actually to see, you know, what he has to say and what he actually has to say in terms of the strength of the US economy, and of course, you know, the implication that may have on future rate rises within the US, because of course that will have a massive knock-on effect, and we'll come to that in a moment. But I just wanted to start with you know, a little bit of as I said, there was a little bit of fallout, you know, from last week. We had the sort of Salzburg meetings there for the UK and the European Union, and at the start of the week it all looked like it was all going to be very well. By the end of the week, Mrs. May and her checkers plan were sort of left in tatters, and not surprisingly, that had an implication on sterling and on also the euro. So, you know, we look at how that you know, how that plays out and how that can actually form a trade opportunity for ourselves. So here we are. We're looking here at the euro sterling on the weekly chart. Okay, for those of you who are completely new joining us for the first time, my charts are quite simple. I have green bullish candles, red bearish candles, blue 20 simple moving average, a red 50 simple moving average, and a green 200 moving average. I have fractals on there, and you can see I will draw in particular levels of support and resistance, and also particular patterns that I see forming. If you want to know more about that and learn more about that, well then, Admiral Markets, we run a Mastering the 4 M's of Trading webinar every Monday afternoon at 4 o'clock London time, and if you'd care to join us for that, you'll be able to learn a little bit more about how we view the markets. But what I'm looking at here is that, and you've heard me, those of you joined us regularly, you've heard me talk about how we've been between this kind of 87.50 and 90 level, okay, for, well, realistically, you're looking at now for about a year or so now, getting up to about a year of just bouncing back and forth. What we had was a couple of weeks, as I said, we pushed up, and then we had a really kind of a big sort of what I would call a momentum reversal candle and fell away. But actually, you can see last week what we had here was this is a key reversal candle, okay, on the weekly chart. It's we pushed to new lows, but actually we fell all the way up and fell all the way, raised all the way up, and closed closed on highs, closed sort of above the high of the previous week. And that's really an implication of what was happening with the sort of the moves there being made during that Salzburg meeting. So I think there's a little bit of a bounce about to go on, and I think as a long-term trade, I would be a little wary, a little skeptical at the moment, because there's a good deal of nervousness as we sort of run towards the end of the year and start to look for sort of deals to be done, and the comments that I have and the moves that we'll have upon the markets. But as an intraday trade, as a short-term trade, well, there's always something that we can look to sort of trade upon. And in particular, what I'm starting to get interested in is, having seen that weekly key reversal, what I'm looking at is, I'm just drawing my fib tool over there, and I'm just looking there at around about that sort of 50% to 62% retrace of the move, which is in the region of around about 89.20 to about 89. Call it straight on the level 89. So there's a 20 pip range there. So what I'm actually going to be doing is I'm going to be just watching to see how price sort of gently moves back down to that region. If then I start to get sort of bullish reversal patterns there on sort of maybe the 4 hour, the 1 hour, and 30-minute charts, well then I'm going to be looking to sort of be a buyer there with my first sort of target up to around about the 90 sort of big round psychological number, maybe even up to about 90.20, 90.30, because we've seen it go there in the past. But with moving down there, if I'm looking at sort of trades in the region of, let's call it around about sort of 89.15, 89.20, with a stop beneath the 89 psychological level. So I'd be risking somewhere between 20 to 30 pips for a possible sort of 100 to 120 pips. So that's going to give me somewhere in the region of about 4 to 6 R. Okay, my sort of reward for my risk. Those of you who know how I trade will know that I like to sort of trade what they call an asymmetric reward to risk ratio. Okay, if I'm going to risk 200 euros, I want to be able to make 400, 600, 800. That's the way I personally like to trade. So just keep an eye on that zone there, kind of 89.20 to 89. Let's just see how price sort of rolls down there into it. Okay, and let's see, if keep an eye on any kind of bullish reversal patterns there that we see, that will give us an opportunity to sort of take a trade back up to that 90 level. So, with that, as I said, we've had a little bit of, pain with the sterling, and I'll try and sort of, look at some of the questions that that we always get thrown in. But here we are on pound against dollar. Here, this is the weekly chart. Those who know me, those who knew, I love using the weekly charts, and here we have, we can see that, after a great downtrend, okay, for most of the last 6 months, we'd actually had a little bit of rally. We had a little bit of a rally because we had a little bit of dollar weakness, and also people starting to think that perhaps a deal was to be done that with the EU, and maybe it might have even looked a little bit like there was a bit of a sort of scruffy flag, okay, sort of setting up there. And what kind of gives people that impression is that we can see here last week we had a real sort of weekly rejection candle there. Okay, we pushed up to about 133 there, okay, 132, and then fell all the way back down. And if for those of you who are trading at the end of last week, week. Okay, you might have seen this. Okay, we had just really as the kind of news came out of Salzburg, we can see that invariably the price just fell away there, and just in the course of the day on Friday. Okay, we just had real sterling weakness, and then we had sort of pretty much sterling weakness across everybody. So at the moment, what I'm going to be looking to sort of to do with that is I'm actually just going to be seeing to do we get back up to around about that kind of 130, 180, 132 level. That's what I'm going to be keeping an eye on. All right, just to see, is this is there actually still sterling strength in the mix, and was actually Friday just a bit of a knee-jerk reaction? Of course, that will in terms of trading pound against dollar, you're going to have to take into account that, of course, tomorrow evening we'll have the FOMC reserve announcement. But as I said, most of that move has already been baked into the chart. What everyone's waiting to see is what will Powell say about the sort of future rate rises, and that's the kind of bit that has interest. So that takes us on to sort of the US dollar. Let's see if I can bring up my quick dollar index chart. Okay, I'll just here we go. We'll find it here. I've got it all set up as usual. So here we go. So here we have on our weekly chart here, okay, on the dollar index. I've been talking about this for months, okay, really about how we had a breakthrough of 95. We thought we'd get strength, but then actually we had, if you notice, a couple of weeks ago I talked about we had a weekly evening star formation showing, which is a bearish formation, and we talked about we'd want to see a bit of a retrace before it rolled over, and that's what we've done. And not only did we have a little bit of a retrace before it rolled, but we also broke that supporting sort of trend line there at the moment. So for the moment, okay, our view would be dollar weakness is in play. Okay, dollar weakness is in play, which will have, of course, a knock-on impact to things like the Swiss franc, which has been very, very strong. Also euro dollar, which we'll look at in a moment, and pound dollar, which we've just talked about. So we're getting a little bit of a dollar weakness there. Okay, and once again, we'll see the kind of next move from that, I think, after tomorrow evening, based upon what Mr. Powell has to say. But we'll keep an eye on that for what actually happens after that after Powell's commentary. So let's have a look with euro dollar, okay, in terms of moving on to the sort of the big elements that we look to sort of work and trade with. And that sort of dollar index move has of course it has an implication on the euro dollar, and what I'm looking at here is that I'm looking at prices just effectively on the daily chart. It's up above that kind of 117 handle. Okay, 117 sort of 50. There's a little bit of support zone then, and hopefully you can see that at the moment it looks like it's just been sat above there. Okay, as we've had a little bit of a rejection candle there at the moment, but I think it's I don't think it's sort of strong enough to sort of tempt me to basically to short that market at the moment. Okay, that would indicate euro weakness, dollar strength, and I don't see dollar strength at the moment. What I see is effectively as holding above that level. Okay, just holding above that level at that moment, just keeping a kind of 117.30, 117.25 as a little bit of a support level, and if that holds, well then maybe we'll see some euro strength. Alternatively, based on what Mr. Powell says tomorrow, well then if we see that break, well then invariably we're back into this range between 115 and 117. Okay, and perhaps Mr. Powell will say something that actually just gives us some let's say some short-term dollar strength, okay, and euro weakness, in which case we'd be looking for that 117 to crack and back down to around about, I'll be looking at around about 116.50, 116.70 as the next support zone in there. And that's really that has a knock-on effect there. If we look at gold, I know some of us are quite keen gold traders. We had a quick chat about it last week. Great downtrend. Okay, we were talking about the downtrend for weeks and months. We had the kind of real parabolic move down there at the end. Okay, really just collapsed. Not surprisingly, we had a little bit of a bounce. And last week we talked about where we're getting interested in, was it actually building up as a bit of a squeeze, where we're going to see some either a move down to form a double bottom, or where we're going to get a breakout there to run up to maybe to the sort of back up to sort of 1280 where the daily 200 is. Well, you can see there yourself, ladies and gentlemen. We're just consolidating there. That's it's once again it's a little bit of a knock-on impact on the sort of idea of the dollar and the U.S. economy. And so at the moment I'd still just be basically just watching that. Okay, just watching gold. Okay, waiting for a breakout. Okay, and waiting for a breakout to confirm itself. I know some people like to break the trade the initial breakout. Personally, I like to sort of just wait and see. Okay, especially something like this, see if it breaks that level to the north at about 12.15. Can it hold above it? And then if it holds above it, well, then I'll be looking for for it to use that as a springboard for its next move up. Alternatively, okay, if we see a breakdown beneath about 1190, well then I'd be expecting us to at least sort of target down to about 1170. But if I'm honest, I wouldn't be sure if that is sort of moving down to form a double bottom there at the moment. I would be the sort of time will tell on that. So we just add that to our watch list, and we just keep a little look on that as we go. So before I take any questions, I'll just finish with DAX, because I know we've got some very keen DAX traders who join us every week. This is the daily chart of the DAX. Okay, we've had some good trades on this the last few weeks. Okay, especially on the sort of swing term trading on the DAX. We've had going back a few weeks. Came back into a zone where we were looking to be sort of buyers. Okay, where we expected some support. Okay, so to be some demand there, and we've had a nice rally up. And last week we were talking about maybe rallying back up to the 50, and we can see there. Okay, the 50 period moving average. Okay, in the daily chart pushed up. All right, and we've actually had a little bit of a consolidation under that at the moment. All right, and if I go down to the 4-hour chart, to look at, well, what I see here is, there is a little bit of a, a kind of, a little bit of a flag pattern there. Okay, in an uptrend. All right, so let's just maybe. Drawing's not too great, but what I personally think is that I actually think we might sort of continue down with that. We might continue down with there. Okay, just a little bit further down towards this region of where the 50 and the 200 period moving average are, just moving down there. Okay, around about that drift down. Let's call it around about that 12,250 area. That's what I'll be looking for. 12,250, taking an interest there. Then looking for kind of bullish reversal signals here. Okay, so so we're looking at bullish, an engulfing candle, a key reversal, a rejection candle, a pin bar, maybe even something like a smaller sort of inverse head and shoulders on the sort of shorter time frames, and looking at that, and then looking at how that might sort of attack the daily 50 again, which would be around about that 12,400 level. So there's about 150 ticks there of possible profit, and as I said, it's about just having a little bit of patience to sort of just wait and see if we can get the sort of the pattern and the play that we're looking for down and around about that sort of 12,250 zone. So there you go. Jens, just a quick. I've gone through there a little bit quickly. If we've got time for just a moment or two, just for a last question or two, I'll try and help out where I can.
Yeah, some questions or some markets we like to analyze together. What about DAX 30, please?
Okay, we've just finished the DAX there. Okay, if we can have a look at it on a sort of shorter time frame, but I think it'll be pretty much the sort of the same picture. Okay, as I said, I'm still sort of waiting maybe down to that sort of 12,250 level. Okay, I'm kind of liking to see that we might sort of drift our way down, and then then in that area, in that zone, that's when I'll be starting to get very excited about a possible bullish trade to the upside. That's what I'd be keeping my eye
on. And of course, Brent oil CFD, please.
Okay, let's bring this up. I know we've normally have a look at Whitty, the sort of West Texas. I'll just I've got so many products here to sort of enjoy trading on the Admiral Markets MetaTrader 4 Supreme Edition. Okay, and here we go. Let's have a look. We've had a bit of interesting work there. Okay, on Brent, we can see that we've pushed to these kind of recent highs there. Okay, certainly we've pushed to sort of highs there for the year. We can see that on the how we've worked there. Above that 80, it's been quite an interesting sort of drift northwards. All right, we've had a little bit of a drift south, and then we've had a real strong rally there. Personally, what I would be looking at is once again when trading trading a breakout like this, I'd be waiting to see, will it confirm itself above that sort of 80, 81 level? I'd actually like to see maybe price drop back down to that area, 80, 81, sort of drop back down there, form a base, give me some bullish projections, bullish reversals, and if so, then I'd look to be a buyer there back at that kind of 80 to 81 level. Jens, that would be my plan for trading Brent.
All right, and if you have 1 minute more, Bitcoin, BTC, USD, please.
Bitcoin, absolutely. Let's have a look at this. Okay, so we did a little bit of this. I think maybe last week or the week before, but I'm always happy because it's fascinating. Here we go, weekly chart. I see that as a descending triangle there. Okay, descending triangle in the downtrend, and with that in mind, what I'm looking at, if I go down to the daily chart here. Okay, let's zoom out a little bit. I'm kind of intrigued that, we have this, we've got sort of 6,000, okay, 6,000 to about 5,750 is acting as a kind of a level of support there, a zone of support, all right? As I said, we can see it's been in a sort of descending triangle. My own view is that, if it breaks 6,000, that 5,750 area, okay, I wouldn't be trading the breakout. What I'd need to see is it sort of break and hold behind that. I'd be wary if it's a bear trap, because this is such a sort of a well-recognized zone. Every man and his dog will be watching it. But the thing is, if it does break beneath it and hold, okay, then I'm looking at 5,000 and then 3,000 as significant levels. Alternatively is it can come down here, and as I said, this is why I wouldn't trade the breakout. I would just be watching it to come down, and then if we get a little bit of a false breakout, then don't be surprised if we not sort of break through and head back up towards that kind of 8,400 level. So we're in a downtrend, but just let's see how price reacts at that 6,000 area. That's what has me interested in Bitcoin at the moment, Jens.
And if you spend 1 minute more, Dow Jones, please.
All right, yeah, absolutely. Let's go. Let's get up a Dow chart here. Find my on here. Here we go. So a little bit like oil, Brent oil. Okay, what we've had here on the weekly chart is we can see we had sort of the highs of the year and some really recent relative highs. Okay, around about that 26,700 level. And actually, what we have is we've been, to use a sort of English phrase, we've been sort of tickling the soft underbelly of that level again. And we can see that last week we pushed up to it. Okay, but this is a little bit why I don't like to trade breakouts myself personally, okay, because it's very easy. There's going to be lots of orders there, and we can see that actually price got back up to that level, but you can see it didn't really hold above that level. Okay, we got up there, we had the price action there. Okay, there's it's very choppy, and actually what we've had is this week is we've had a little bit of a drift away. Okay, so my view on this would be I'm going to wait to see if price reassaults that sort of 27,000 sort of 26,700 level. Okay, that's what, and I'll be looking to see how does price react there. Does price get above it and hold, okay, which showing some strength, or will it actually get up there and run out of steam, okay, and then roll over, which would give me, a further sort of lower high. And then on a short-term trade, I'd be then basically looking to sort of trade the drift back down to that 50-period moving average at around about 26,400. There you go. I hope that helps.
Thanks for today. Tomorrow is another day, so we have 5 days a week, 5 different traders. If you like us, join us tomorrow to the same time again. And if you'd like to see that again from Paul, a couple of hours later, it will be available on our YouTube channel. Just visit youtube.com/AdmiralMarketsFX. Thanks to Paul, thanks to everybody, and all the time, good trades. Greetings from Berlin office. Bye-bye.